Alright everyone, it's time for another hiking CPA. It's really windy out here today. That's why I'm using the Bluetooth. Hopefully this will work. I'll come out nice and clear even with this whooshing of the wind as it's passing by. I'm here at the Kilarney Provincial Park. This time I'm here at the Nelle Lake, which is quite an excursion to get to. There are multiple ways to get here. You can hire some of the local lodges to pretty much borrow their canoes. We didn't, we brought our own and hiked all the way in here, and just to let you know, my shoulders are so sore from carrying that canoe up and down those portages. I just want to show you a quick view of Nelle Lake. I purposely tried coming here, and this is something that you see the sun setting over here. This is something that's actually incredibly special. The one thing with Nelle Lake is that the water is actually totally clear. Let me see if I can reverse. Amazing about it is that when you go out there, you can see for 20 meters down, you can see the bottom. And that's totally true. I went out there and it's almost like a swimming pool. The reason for this is because at one point, there's so much acid rain, it killed everything in this lake. And that was coming from the copper mines north of here. Since then, they cleaned up the act. This lake is slowly healing, but it's still this crazy marvel of a lake that has this crystal clear blue water. It's just absolutely worth coming up here for. So what I'm going to be talking about today is employees versus contractors. So this is actually very specific and very important because each one gets their own set of expenses and rules associated with them. For the most part, the IRS has been trying to crack down on whether you're an employee or a contractor, mostly pushing the employee aspect. And this is critical for companies because if they misjudge that, then they can be stuck paying a lot of back taxes for Social Security and Medicare. And this can go, and plus penalties and interest, and this can just ratchet up fast. So make sure you know if you are an employee or a contractor, especially if you're an employer or somebody hiring out somebody. So there's a very basic way to tell, and that is who has the direction for that individual. And there are three categories that this kind of falls under that the IRS talks about. One is behavioral. Basically, who has direction on how this person does what they do and kind of acts in this job and their performance. Who does that? Is it the employer or is it the person themselves? If it's the person themselves, then you could say they're a contractor. And move on to the next part, financial. Whose job is it to go and collect, the money, the revenue, and go pay all expenses for the company and things like that? Whose job is that? Is that the employers or the individuals? If it's my job to go and collect money from, my clients and also to cover all the expenses associated with that clientele, and I get no reimbursement whatsoever from my company and I keep all the revenue, it's pretty certain I'm a contractor. Not always. I'm not going to say it's always the case, but pretty certain. And so you kind of have that debate there on whether or not contractor based on financial control. But really, it's who takes care of the finances, the books. Is it you or is it somebody else? And if it's someone else, then you're most likely an employee of them. The last aspect is relational, and that simply is who covers the pension plan. Do you have a broken down contract? And that contract, does it say, hey, you get pensions, you get benefits, you get all these things from the company? Or are you expected to cover all of them? If you're expected to cover all of them, then you are most likely a contractor if you meet all of these specifications. And another aspect that a lot of companies try to do to kind of cover themselves is they try getting these contractors to get companies. Because another thing liars will look at is basically saying, are you in business for yourself? Is this something you do constantly and you go out there consulting to other companies or not? And one way to tell is you have a partnership or some other kind of entity that you established for this purpose. And if you don't, and you're sole proprietor, then liars tends to try making you an employee. That's why a lot of times when you go out there to be a consultant, companies will say, hey, we want you to be an LLC or S corp. They don't really care. Some kind of entity, so that way it's obvious you're a contractor to them and not an employee of theirs. here's one thing I've learned with this. The sad truth is, most of these companies, they'll promise the moon to these consultants, and the second they need a budget cut, the first one's gone. So be wary of this as well. And if you're going to go out there and be a contractor for somebody and have to create an LLC, do this with an intention of being a consultant and moving on, just not this one company, but moving on to multiple companies. Remember, if you're a consultant, you're a consultant. You don't have to just stay with that one company. You can have multiple consulting entities, companies that you're working with at one time. So that's what I would recommend. Diversify your clientele. The benefits of being a contractor is that you collect your revenue, you set your hours, you set your performance. If you're doing a bad job, it's going to be obvious because no one's hiring you. If you're doing a good job, then everyone's going to be clamoring to get you there and doing their projects. And so you will be able to pick up all that revenue, pick up expenses associated with that revenue. For example, there's a home deduction, so home office deduction. So you can actually get that if you are doing a self-employed individual. And so you cannot do that if you're an employee. Your company might be able to. There are some rules there that they might be able to get, included. But really, there's nothing there. And for employees, there really aren't that many deductions anymore. A lot of them were taken out back in 2015 with the whole, Trump taxes. So those were removed. So there's really not much there for an employee. But for self-employed, you have all your expenses associated with that performance. So for example, if you have a home office and you have to go to other people's offices, that's traveling. Now you can take the deduction of your car mileage to go to all these different offices that you're consulting for, because you have a home office where you do most of your work. And also you take the deductions for your home office as well. Also, you can have meals and expenses paid. And there's so many other expenses associated with it. If you need a new computer, you go buy one. That is now an expense for you. If you need a new buds, go buy one. That's now an expense. And there are car expenses. So there are lots and lots of expenses you can take. Here's my one warning though. Do not forget the self-employment tax. This is something that's easily overlooked. And people do it all the time. They do their taxes. They're like, oh, this is good. I made all this money. And then, they end up having all these deductions. They're like, okay, I broke, about 10,000. Wasn't that much. So they don't expect to pay any taxes. And for the most part, if you made a falling joint, you don't. But self-employment tax comes in after all those credits. And that's where they're like, why am I paying taxes? Why do I owe money? That's why you have self-employment. And what this is, it's basically the Medicare and Social Security that is covered by your employer. And you notice on your paycheck it comes out. This is IRS saying, okay, you're self-employed, you have to cover both portions. You have to give us the money. And so that's what ends up happening. And that's why this is kind of a surprise to some people that they have to pay money. So what I suggest doing is, basically keeping about 25% to the side for taxes. And that would generally cover you for, especially for federal taxes. Depending upon the state, that probably add maybe 5 to 6 or even 10%, depending on how much money you're going to make. If you're really in demand consulting and you're making gross and you're netting $2-3 million in the state of New York, you want to do that 10% level. And so if you're doing less than that, go ahead and do 5-6%. It's roughly 25, maybe 30%, and you should be covered come tax time. And there'll be it won't be as big of a shock or surprise when you have to pay money. So that's why, being a consulting self-employed, it is great, but you're also working for yourself now. So you're setting the hours. You are somewhat setting deadlines. Your clients are also setting the deadlines. So you have to make sure you meet expectations of your client or exceed those expectations as well. And so once you do these things, kind of like coming to this lake where it's totally clear and it totally met my expectations of everything I've read about it, I'm not here suggesting to you guys to come and visit. It'll be the same thing for those self-employed individuals. You will find more people referencing you and sharing your information with others. So those are the differences, and make sure if you're self-employed or contractor, and make sure if you look like you're actually your employer says you're a contractor, but really you're an employee for all intents and purposes. Let's say it's a landscaping company and they say, oh, you're a contractor because it's only for seasonal. No, you're really an employee, and you might want to tell them. It might be a hard, tough situation, but you might want to tell them because it's going to hurt them in longer term if you report it to IRS. And by the way, you can actually get money for reporting these things to the IRS because IRS now has a program where if you report tax evasion and things like that, you actually get a share of that money that they collect. So this is, in your benefit to actually go and report these things even, or maybe in your benefit to go and report these things. So once again, make sure you know if you're an employee or a contractor. If you are an employer, make sure you know this stuff too. You do not want to say someone's a contractor when they're really an employee and get caught with that. They're really hammering down on that. If you show, especially if somebody's self-employed, and you just show a name saying, hey, here's 1099 with the name, they'll expect an IRS letter saying, is this guy really an employee? It's going to happen. So until next time, happy trails. Because of the wind, there actually are pretty big waves here.